Hello everyone and welcome to Trader Talks, our videos that give you top trading ideas. Now, if you haven't yet signed up to Handtech to trade with us, you can go to hmarkets.com where you've got a lot more information. You can sign up for demo accounts very quickly or even sign up for a live trading account in 4 easy steps. Now, welcome back, Steve. We had a week off last week, but still markets continue to move, I think, in this risk positive direction.
Yeah, that's what I'm seeing. Certainly, say a week out from the Trader Talks last week, but then markets kind of consolidating what they'd already been showing us anyway. These broader risk-on themes, which are characterized by US dollar weakness, general equity strength, and I know you're going to be looking at gold, but I think we're going to kick off with the S&P 500 with myself today on the equity side.
Yeah, go for S&P 500 first.
Yeah, so we're going to take a look at really this kind of continued grind higher. As I say, the market's been consolidating and solidly consolidating above this trend line that comes up from May, and then also rebounded on notable occasions in here, at least 2-3 times from around 3,200, took out that previous peak at 32.33, and then took us up to 32.79, and then yet new highs again to kick off August this week, taking out over the last 24 hours this psychological option level at 3,300, and that just leaves the market upside now for me to target. You've got this bear gap. It was the COVID-19 kickoff gap actually, up at 33.28, that gap. So that's really in the crosshairs going into today, and then even then potential all the way up to the cycle all-time high up at 33.93. I've got nothing really to tell me on the actual chart to stand against this. 9-day RSI pushing higher, kind of confirming the new highs.
Yeah, that looks strong, doesn't it, the momentum?
Yeah, exactly. And not overbought at all at the moment. So you've got confirmation and not overbought. Really looking good to me. The two things I'm worried about, and I'd like to have your take on this, is one that European equity indices wobbled last week. We broke some important trend lines that go back to March on the DAX. We also took out some chart support levels on the Euro stocks, and the FTSE broke down below the June low. So European UK stocks looking wobbly, which is a bit of a concern to me. How do you see that?
Yeah, I think it's more of a euro strength story. In the last few weeks, we've seen the euro absolutely storming higher, 700 pips against euro dollar rebound in the last month. So I think that's going to weigh into the DAX. DAX obviously a big export heavy index. So I think that has played a role in that move. But also you look at how Wall Street has been absolutely smashed higher by the tech stocks. You've seen the NASDAQ actually is around, I think 68-70% higher from those from those March lows. So it's just an incredible move higher from tech stocks, and that really has dragged S&P 500 higher. You haven't really got that tech weighting in the European shares. So I think that's an issue that the underperformance is sort of based around.
Yeah, I'd agree with that as well. The whole S&P 500 move driven by NASDAQ, driven by Apple, Amazon, the likes of these stocks making all-time highs and surging high by tens of percent higher on weekly and monthly basis. So yeah, it's being driven by that, and also then obviously the US dollar weakness in here running into helping the US stocks higher as well. So you've got kind of double bubble on that. You've got US tech plus US dollar weakness helping US higher, whereas on the European side, the euro strength and the pound strength you're seeing in here, more of a negative in here for the European stocks and the FTSE 100. You're looking at gold though, right?
Yeah, I mean, we talked about gold a few weeks ago, and I mean, it's just absolutely killed it higher, hasn't it? I mean, it's broken out above $2,000 now. Incredible move. I just don't know how much further this gold chart can go on a sort of rational basis. On a near-term outlook, it's incredibly overbought. On the 14-day RSI, it's up in the high 80s. Now, that's more overbought than it's ever been before. I've put a projection from the fib levels of the March rally, the original March rally, and the fib projection is now through 100%. So it is sort of through any rational target areas for the breakout. So I'm just, obviously, you've got to run this higher because it just continues to go. But you need to be a little bit concerned that at some stage there's going to be probably a quite considerable corrective move as well. And you need to be on the lookout for how the market responds in that scenario. I think $2,000 is obviously the key level on a near-term basis that you can point towards. 1980 was a breakout level. That was also around about that 100% fib level projection. So that's another level I'd be looking out for. But you'd be looking for sort of near-term negative divergences. I talk a lot about on my daily stuff that the runs higher on gold have all had bull failures, candlesticks that are bull failure candlesticks, such as shooting stars and things like that. So we haven't got those at the moment yet. And what you'd be looking out for is the driving factor behind this. And I think it could be the fact that if Congress comes to a resolution on its fiscal support package, I think you could start to see yields picking up, dollar rebound, and I think gold pulling lower.
Yeah, I think I'd have to agree. I mean, I think if you're long, you run the long, right? And you run your stop up a little bit closer. If you're not long at the moment, you're probably wary about getting into that long. It's too early to say go short. I mean, I don't think we're
absolutely
that. But I mean, I think you can, at the moment, it's just being cautious and aware that this is very stretched. Now's not the time to maybe enter the trade. And if you're already in the trade, to be ready to maybe exit quickly if this all starts to turn around. And as you say there, and as we're highlighting on the charts, US dollar and the yields in here helping gold higher. And if they start to turn around, so monitoring those as well to maybe give us an indication.
Non-farm payrolls on Friday is a bit of an event that we could see some volatility there, but I still think it's going to be that Congress move that really changes the story.
Okay, cool. Good to speak to you again, Richard.
Yeah, thanks, Steve. We'll speak to you all next time for some more trader talks. Good luck in your trading. Thank you very much.